Hello again, I'm Dean Jones, President and CEO of Realogics, Sotheby's International Realty. This is Market Perspectives, and this time, a dear friend and colleague, we have Kartik Ram, and welcome to the podcast. I'm so happy to have you.
Thank you, Dean. Such a pleasure. Yeah.
You're a wealth of knowledge. I describe you like a Swiss Army knife, many tools, many functions.
Yeah.
But you also have that Swiss mindset. What is it about your background and that Swiss mindset that makes you so successful in this business?
Well, it's interesting. The Swiss were about the outdoors, and then they became about capital, and now they're about conservation.
Interesting.
It's about evolving with the times, but not leaving your legacy or heritage behind. We always love to protect what is ours, but we often take our eye off the ball on what we could have.
Interesting.
The Swiss continue to get stronger because they've protected their currency, they've protected their turf, and frankly, they protected their values. And I really think as a modern day investor and someone in the private banking space, I feel like it's very important to let clients know how best to do things and how best to avoid things. And I think that's a part of the rigor of kind of the Swiss Army knife thinking that you referred to.
Right.
And it's not a one-trick pony situation. It's different solutions for different problems. So it's very important for us as generalists in our respective trades to know who to refer to and why, and then how honestly to listen to a client and take what they're giving you and make it happen for them.
Well, you have such a global perspective, and I want to talk about your background a little bit.
Sure.
So share with our audience the many different places that you've lived in your education and how you've kind of formed some of your opinions as a very successful businessman and now an advisor.
So I was an entrepreneur first, and it gives me the humility, if you will, to look at situations very much from a, can I make this work standpoint rather than, well, this is just a job. I grew up out east in Asia, in Dubai, in Delhi, came to America as a young student, and I came to realize that there is no such thing as the American dream. You're controlled by the caliber of your thinking and frankly actions.
Sure.
And everything in life is a relative meritocracy. So we were all given opportunities. I mean, we kept getting a chance to go back and shine. The global financial crisis gave us a reset. COVID gave us a reset.
Absolutely.
And what I do well, I think, in my life is take advantage of resets. And I feel like we have one coming in real estate right now.
We need to talk about this.
Yeah.
And we also have other things coming to our region like FIFA and Super Bowl visibility.
Sure.
And, we're going to talk about the light that is being shone on the Pacific Northwest.
Yeah.
And you and I both have a history in Canada as well.
That's
You're
right.
From Alberta,
Yeah.
from British
We're
Columbia.
dual citizens. We value the quality of life that
Right.
Canada has given us, and frankly, the grounding and the healthcare and frankly, the mirth. But then in America is where true capitalism resides for us. So you're making a go of your business and you've done really well, but you can't scale alone, right? It takes a village.
Well, 30 years of scaling for me in the Seattle Bellevue metro area as a developer and now as the owner of this fabulous brokerage. But having that global point of view, listen, Kartik, I came here because of the opportunity. I felt like the Seattle Bellevue metro area was perhaps 20, 25 years behind some of the policies that we talked about in Vancouver, BC. But now I feel somewhat more successful by having made that move and avoiding some of the taxation and, the bans on foreign investment that we've seen up in
stamp duties.
It's become a very expensive place to be in Canada. Now we're looking at some policies in our own fair state here, Washington. We were for many years, I'd love your perspective, known as the evergreen state. I say that because easier to make money and with our lack of income taxes, easier to keep that money and relative affordability. You compare that to California, otherwise known as the Golden State, which increasingly you want to be made of gold to live there. But talk about those kind of comparisons, but also where we might be seeing some policy shifts and how that's affecting your clients and where they might want to reside.
So we're seeing kind of the trust refugee being formed, and that was never a conversation I had 10 years ago. Because we came here for the lower cost of housing compared to Silicon Valley.
Right.
And we're leaving now because the state has become, the euphemisms, the costliest state to die in, but it's also becoming a very costly state to operate in as a business owner. I really think business ownership is the engine of growth in America. Right. And if you can't support the small and mid-sized enterprise, well, the large companies are going to leave on their own because they have the resources and the teams already. What's happened in Washington is a little bit like a death by a thousand cuts. It started out as city councils enforcing kind of protectionism, but now the state is overreaching, in my opinion, and literally telling people how they should earn and where they should earn and how much they're going to take. And we've never had that kind of oversight. So I just feel like capital is like water. Bruce Lee described it as it flows, it's shui, and it's going to flow to wherever is more accepting. I've been spending more time in Jackson Hole, Wyoming. It's one of the markets that I look after, and I'm finding that their trust laws, which permeated from South Dakota, are so friendly for a family member to give their children and grandchildren, and succession planning. It's also great if a husband and wife want to pass on money to each other, right, or if the sale of a company happens and a person wants to buy a homestead. And I really feel like other people and other places are going to just come knocking, and our state is on the back foot. And so I really think it is up to us as Bellevue ambassadors to really tell this story of Washington, because it still is one of the greatest places to live. And in terms of store of value, I think real estate here still has the most intrinsic value compared to many other places.
Well, we could talk about some states. I mean, let's talk about your hometown in Dubai. I mean, there was from the sand to the sky. Right. I was there in the fall of 2019 on a mission with the Jones Family Foundation, and then we went on to Tanzania and did some great things and had some amazing experiences. But I was astonished at what 25 years did in Dubai. What was the backdrop for that, and how do you feel like that region is reinventing itself?
It was this realization, epiphany, that oil income and oil profits aren't going to be forever.
It's like a 40-year burn rate on that, would you say?
Absolutely. So they built up their sovereign wealth reserves first, and when those coffers were able to make acquisitions of hotels and cities and countries, they pivoted to tourism and services. Right. You know, you hear every second day that experiences is what we pay for as leisure travelers. Well, Dubai figured that out many moons ago, and they went and they transformed into a services culture. And I feel like Bellevue is very similar in a way to the city of Dubai, where there's high-rise developments, there's tech companies. What it lacks, though, is this tax friendliness. Because really, when you combine tax, quality of life, and excellent services, great restaurants, great establishments for your dogs and for your children.
Absolutely.
That's when you become a playground. And I really feel like there's many cities that are now taking that model and replicating it, whether it's Miami or Monaco or what have you. But really, Dubai carved kind of the vision. And really, it's a bit of an economist's vision. You have to see around corners. You have to let people know how it's going to be if they don't do something.
Right.
And even if you're wrong, as a lot of economists are, it's very important to make that bet. And they made a bet and it worked out.
Well, it's an incredible story of innovation and rebirth, literally what seems like overnight, because just
shedding
25 years can make a world of difference. And with policies and the global consumer of today, I mean, it was one of the reasons why I became so invested in the Sotheby's International Realty brand. I watched how international influence and foreign direct investment changed the landscape of Vancouver, British Columbia, largely after Expo 86 helped discover our beautiful region.
It was their coming out moment, if you will.
Yeah, and it would double down, of course, with the handover in Hong Kong in 97, and then later with the Olympics in 2010.
And SARS as well in 2004.
Absolutely. But you can almost not recognize the city from 30, 40 years ago. And it doesn't take that long, to become discovered and then create that self-fulfilling prophecy of the next market to matter. Now they've kind of reached a different kind of inflection point, right, with the foreign policies that they've put in place, and now there's some real estate correction taking place. But I had noticed a lot of that propensity here in the Puget Sound area. And I did some business in the late 1990s and early 2000s in the San Francisco Bay Area. And that was well before we saw the meteoric growth of Seattle and, of course, Amazon. And, there was the dot bomb that took place there. But since then, we were the fastest growing large city in the U.S. And I don't know that we can hold that moniker any longer because of some of these policies. And now we're seeing some very large companies that might be making their way into Bellevue or choosing other states to do business because of these policies. And so there's a pro and a con to having such meteoric rise in global demand. But we have to remember that we're in competition with other West Coast gateway cities, and supply and demand is never evenly distributed. You need to earn it. So what are your viewpoints on kind of where we've been in, our regional economy these last, say, 20, 25 years? And what do you think is the future for the next 20 or 25 years relative to other West Coast gateway markets?
Yeah, that's a great question, and there's a lot to unpack there. I think the first wave was led by anchor tenants, like big employers, hospitals, tech companies, Microsoft, Amazon, etc. But now the narrative has shifted to what's the most business-friendliest place for me to set up my own business, my marketplace, my Shopify store, my startup, my AI company. And I really feel like we've gone away from like these urban planning experiments of large high rises, and more people want to own a smaller plot but have the ability to cultivate on it. And I really think it's going back to first principles of like, I may not want a car, but I still want to own the house that I live in. Right? I don't want to be a permanent tenant. Is Bellevue going to be the place where I can afford to do that with my salary? Probably not. Is Bellevue the best place for me to start a business when I leave my big employer? Probably not. And that's why you're seeing this kind of reverse brain drain of like people moving out for their job, now moving back in, getting disgruntled or laid off, and now moving back out because they had planted a flag in Boise or Jackson or somewhere else, right? And so I really think we have to be conscientious as entrepreneurs to tell a consistent story. Where do entrepreneurs go? They go where there's funding. They go where there's tech employment and there's other people they can hire. We still have it. We have a lot going on. We're far ahead of San Francisco and Silicon Valley. I think we punch equally with Austin and Denver and other markets, but we will lose relevance if our government and our policy and our storytelling becomes one of like, hey, we're going to tax you on capital gains. We didn't tell you that before. We're going to charge you labor and industries kind of penalties. And there's all these stealth taxes. And if you think about it, you brought up Dubai. Dubai is actually a victim of that as well. They've brought back GST or a VAT. They're adding income tax. I mean, come on. Like we grew up expecting it to be tax-free forever, right? So you can't move the goalpost on entrepreneurs. Employees don't have a choice. Entrepreneurs have a choice.
Well, I mean, Dubai wanted to become the financial capital of the Middle East. And they did a good job at attracting a global audience to pay attention and be in residence there because of the tax policies, and very friendly to business. But if the city of Seattle could learn one lesson from knee-jerk decision-making and policies. I mean, look at what HQ2 was in the late teens for Amazon. They said, we don't have to be here. We could be anywhere. And whether, the 425 became HQ2, but obviously there's many other headquarters for Amazon now. It's proof in point. Even Jeff Bezos himself famously relocated out of the great state of Washington to Florida. For what reason?
So I think for him it was very much about nexus. It was his houses and his kids and a lot of things were still here, his employees, but he realized the amount he loses by being here, it's just not worth it anymore. So it's an opportunity cost narrative. And so I've always learned, having grown up, in the eastern part of the world, is you think a bit like an expat. Like an expat works for a living somewhere, but keeps their money somewhere else quite often. Vancouver was built by expats, people that came from Hong Kong or other places as professional workers and travelers. And they said, wow, we're going to transform this neighborhood into an expat-friendly community. I think Bellevue has that going on with all the global employers that are here, but you just don't feel the culture of like second citizenship and tax optimization and nexus, because anytime you peel the onion a little bit, you go, you know what, it's not that great after all, so I'm going to keep my money elsewhere.
Well, let's remember also that recruiting and retention matters, because you might be the CEO or the principal investor, but if you need workers, then you have to be affordable and you have to feel safe.
That's right.
And so that's a lot on our municipal government, and certainly with House Bill 1110 and what James Lee has done, from a state level years past with, trying to fix this middle housing crisis by upzoning single family land. But it's going to take many years to realize the potential of more affordable housing. Back to the overall cost of living, are we losing our competitive edge as the cost of living increases, as now the potential imposition of additional income taxes?
Stealth taxes.
What's going to happen?
I think it's a creep, and cost of living goes up a little bit, but more importantly, our spending power and our discretionary capital goes down. I call it the 3 W's that define how we feel about our real estate, about our lives, about our cars, about our wealth transfer. So it's wealth transfer, it's wealth preservation, and it's the wealth effect. Wealth effect is more sentiment. It's more about how we feel today based on how the stock market is doing, how our holdings are doing. But it's a real thing, because it's what causes me to take an action.
Right.
Buy a car, sell a house, refinance my mortgage. The wealth transfer is an interesting one. We've become draconian in many ways with our estate planning laws, and that is causing the wealth transfer to kind of drain out of here. And wealth transfer mechanisms are being set up everywhere but here. The Cook Islands, Wyoming, South Dakota, Florida, you name it, And I really feel like we used to be kind of a tax haven, and we're not. Right. And finally, I think the whole notion of wealth transfer, whether it's horizontal between husbands and wives, between companies selling, startups exiting, founders selling stakes, employees selling their shares, which you're seeing a lot of. Well, when they take in that money, it's net new money. Do they want to reinvest it back in this city and this state? And that's the question I ask myself every day. And I think the answer is still to be determined, because I still think we live in the greatest city in the world. But I feel like we're losing our competitive advantage, to answer your question.
Yeah, Kartik, I really think it's important that you said that, because the fact is we do have a beautiful environment here, and we are blessed. And we have the mountains, we have the bays, all the waterways, and a relatively moderate climate. And you've lived in the UK, in the Middle East, in Canada, and now Wyoming here in Washington State. But if I could look at your particular situation, I think you shared your principal residence is in the state of Wyoming, probably for a reason. If you would share, you're in the process of lovingly letting go of a home out on the water in the Puget Sound, but then particularly considering a lease for a little bit.
That's right. And that's the elephant in the room, right? I think there's a lot of professional renters out there.
I agree.
In the past, we would live in a hotel. I lived at the Marriott Bellevue for many months before I found a house.
Right.
And I felt it was okay to do so because I didn't want to make the wrong bet. Now it's more like, do I even want to buy here? And that's actually a scary thought, because the cost of home ownership has become so uninviting that there's other places that I can take that debt to income ratio and take my spendability and go. So I also think there's a second dichotomy here with the economics of renting have gotten better. To be able to mortgage that same house, pick a house. And if the person is renting it, the rent will be a fraction of what you can own that house for.
Well, and there's the value of where does your capital get tied up. And let me be clear, I am very much in favor of home ownership. I've created a great business centered around the resale investment of new construction, as well as second home ownership. But there is a growing contingent of luxury leasing going on, and it's from two sides. People like yourself that might want to take the next couple of years and take your capital, invest it in the markets instead of tying it up in real estate. And then we have these executive homes that they are maybe a little nervous about the markets. They may want to be more conservative and downscale their lifestyle, but not sell their home. And the way they're going to tread water for a couple of years is to lease the property, sometimes furnished.
That's right.
And there's a significant demand for luxury rentals in this market, which is one of the reasons we're making an investment into a property management company, a third-party property management company, for this very reason. And I think as a wealth advisor in our way, in real estate, just like you do, in the banking realm, it's important that you're looking at the whole ecosystem of your client and not the transaction, looking well past the single event and looking at the more global. So what are your thoughts on that as being an emerging market niche?
I think it's an extraordinary market niche because renting is not just for relocation. Renting is actually a very good way for you to wait for a trend to turn.
Okay.
It's also a phenomenal way for you to figure out if your cash is more valuable elsewhere than being tied up in a down payment and in servicing property taxes. And that's another kind of elephant in the room, property taxes, right? People in Medina constantly tell me their property taxes are through the roof. Some are paying mid-six figures for a home. And I just think, imagine having a job just to pay your property tax, right? And it's almost comical. So I really think there's a thesis about being a service company. If you look at the Rosewood Hotel or Amman or Six Senses or any of these wonderful resorts, the reason they have patronage that is regular is because people view them as an extension of their second home.
Absolutely.
And I really feel like you're going to find a whole new class of tenant that is looking for a serviced proposition that isn't a hotel.
Right.
And right now, if I look around at all the big franchises, hardly anyone is tapping into that space. So I commend you because it's not only good for the person that's downsizing or wants to be closer to their kids in a town, but it's also, flip the script, it's great for an owner who doesn't want to take a capital gain or a loss selling their home. Maybe they've owned it multi-generationally, but they don't mind renting it to somebody that's highly vetted.
Right.
I would be in that position quite often if I owned a magical property. I would just want to hold on to it. Because this is also, I think, a terrible time for somebody to get spooked and sell.
I think they could end up leaving some money on the table if they sold prematurely, and leasing for a year or two is a great way to look at a future market. Let's talk about some of the other likely...
But I want a turnkey lease, which Craigslist or OfferUp or Zillow isn't going to give me. Plus, I don't want to be amongst 50 applicants and feel like I'm getting bid up. I want a concierge to help me make that transaction.
So that is the very bespoke quality of service that we provide in this partnership with property management, and it comes with the concierge level of service. And it also works for those second homeowners that might have a property here without a tenant that just want their property cared for.
That's right.
Because there's a lot of real estate around here that are effectively safety deposit boxes. And so they want them either lovingly leased or professionally managed, and our property management company will do that for them.
And generate a yield for them that treads water. It pays off their property taxes and the utilities, but their capital appreciation takes care of everything else.
So let's talk about another trend where the great wealth transfer, and I mean, I'm hearing big numbers, over $100 trillion in our lifetime. We're going to see those change hands. What's the impact, do you think, for this region specifically?
Sure. So there's the wealth transfer that is the movement of money. I think Mr. Pierpont Morgan had said gold is money, everything else is credit. So it's interesting how the market has shifted to view real estate as a store of value. So the greatest wealth transfer, in my opinion, is going to be transfer of generational real estate. Because most people I know, including myself, aren't always cash rich at all times, but our equity is trapped in the value of our homes and our immovable assets. So I think that level of wealth transfer is palpable, and I think it's far greater than the numbers you actually hear about. But the person that inherits that wealth now has to pay the taxes on it, right? So if the cost of ownership becomes unbearable, then the person receiving it is not going to want it.
Right.
So I think this wealth transfer movement is predicated like a marketplace on you giving me something and me wanting to take it from you. And I really think it takes people like yourself as a fiduciary in the real estate world, and me as a banking executive in the privately wealthy or affluent banking world, to really listen to the client and go, wow, are you set up to receive this gift? Do you know the implications of this restricted stock or this house you're getting, or what liabilities it comes with? And I really think giving people the total picture is what is missing in the wealth transfer movement. It all sounds great, till you get it or till you give it.
Well, and the time to make a reaction isn't when there's a health event or an estate tax situation, and this is not the state to be in, is it?
No, it's really not. And I mean, I don't know this from personal experience, but I do know that a lot of my friends are choosing other places, as tactical as Nevada and Idaho, and as far-reaching as Indonesia and Dubai. You know, I read somewhere, and it caught my eye as a global expat, Milan is punching above its weight. And who would have thought that a European city with 20-some% VAT and GST is able to punch so far above because they've subsidized the tax refugee, saying you pay a flat amount. And Switzerland did this, right? Back to your Swiss Army knife metaphor. So I really think it is up to us to think about what is the right solution at the right time for the right client. And just MLSs and open listings of rentals isn't where it's at anymore. Everyone needs an advisor, needs a concierge.
Well, the portfolio that your affluent clientele has, they own commercial properties, rental properties, second, third homes, other asset classes. And when they're doing an estate plan, the right time to sell any one of those verticals may not be at the same time that they make a decision to plan their estate. So I think being guided across at least a cycle or two, it could be 4 or 8 or 10 years by which they navigate between a little out of here, a little into there. This is some warm-handed gifts to the kids and grandkids. This is what I'm setting up in a trust. I mean, it's an ecosystem. And you need to
cost
be well
basis.
advised.
Oh my God. And so there's many elephants in that room. So all wealth transfer isn't created equal. All wealth isn't created equal. And I think the greatest wealth transfer of our time, I think Wall Street Journal wrote about it recently, is real estate. It's illiquid wealth. It's very easy to give cash to somebody. It's very hard to give a house to somebody. Very hard.
Well, we see a very significant increase in second home ownership that we believe will become a primary focus for the future based on the estate taxes of Washington, and increasingly migrating business out of state potentially as well, for instance, into more tax-friendly markets, whether it's Texas, Nevada, or Arizona, or even Florida. So don't be surprised if that is going to create some dark windows in Medina, and there are many developers in other markets that are trying to attract that affluence just for that very reason, that it's a tax haven for the affluence of our region.
And you know, I keep thinking about this phrase, exit planning. For any exit of any sort, you need to plan. And I really think that there's a lot of people here looking at raising capital and moving out, or if they lose their job, then can they get rehired at the same salary here? Probably not. So they're moving to more fertile ecosystems. And a lot of people from other countries, right? I mean, Bellevue, you're no stranger to the internationalism in Bellevue. I heard a stat somewhere that said 50% of Bellevue wasn't born in America. And whether that's true or lower or higher, the point is Bellevue is now really at this cross-cultural precipice where investors from other countries that lose their jobs or change their jobs are making a choice not only to get another employer, but go back to their home country.
I have a question for you. You had a tech company that you had sold successfully, and artificial intelligence is just changing every industry. It's also creating a lot of employment anxiety. We were just talking about some surprises of people that we know that have lost positions or were replaced by, you know, the right sizing of these companies at this time and the rebalancing of employment with technology. What do you think is going to happen for the Pacific Northwest, knowing that so many IT workers are here?
And they're not just IT workers, they're well-compensated IT workers with tenure, stock options, a home, children that go to school in these incredible school districts. So they thought they had a very sticky proposition working in software, and now AI proposes as a novice to eat up software. But I think that's a fallacy. I think the reality is AI is only going to complement people's roles. And I really think it's going to be a long time coming before there's any kind of retrenchment in this. But I'll tell you, the sector to watch is software. I mean, if you look at the stock market today, it's very interesting that software is getting rotated out and energy and precious metals are coming into the conversation. So therein is kind of the next thesis that I have, which is as we think about what happens next to our job, how are we protecting what we do have? Are we just buying another house? Because that seems like a really terrible way to protect what we have, because that could go down. So I really think it's interesting to think about stores of value. And I think if you look at the last 2 weeks, what were the biggest talking points? It was gold and silver. It's like Ben and Jerry, like my two best friends. So I really think there's a real conversation to be had right now about, if not real estate, then what? If not my day job, then what? And I don't think AI is going to be the problem child here. AI is a steroid, and it's a horizontal. It applies itself to anything it takes the shape of. And I don't think it's going to challenge any employment, but it is up to us as responsible citizens to adapt to what happens if.
There has been some job losses, high-profile ones in the tech industry specifically. But the last time I checked, there was more inbound traffic relocating from California to the Pacific Northwest because of relative values, and at the time, tax-friendlier environment than there was in the total job losses combined. And they're bringing with them wealth and that tech transfer as well for their stock portfolio. So I wonder if it just...
And job losses are very tactical. They don't shape a market because they get rehired just as quickly. And I don't believe AI is the reason why these job losses are happening. Companies overhired during COVID. It's just that simple. They had to rebalance, right? Like we rebalance our portfolio. But I really think what AI is causing good is it's causing price discovery. You're able to find a better value for a rental or a house because of AI. Right? That matters. You're able to find employment in another market if this one doesn't work out because of AI. So it's actually very much a helper. And to your point, I think this area has a lot going for it. It has bench strength, but it has to remain affordable. It has to remain tax friendly, and it has to remain competitive.
Well, we're going to be on a global stage in the year of 2026. The FIFA World Cup is a massive megaphone, and you've seen this before in the Middle East. Let's talk a little bit about the impact of Qatar and that FIFA event.
Yeah, it's very interesting. I went before, during, and after the FIFA World Cup in Qatar, and people discovered Qatar for the first time, but they also often discovered sport for the first time. They went for their first sporting event in Qatar. So Qatar calls it their IPO moment, because after that, people started coming for other sporting events and people started coming for tourism. So I think we have a defining moment, a zeitgeist, if you will, sort of like the World Fair you started with. And I think that the follow-through that we launch in tourism and in hospitality and in real estate after the FIFA will be critical to bring people back for other things, right? Seattle used to be the land of great concerts. That's gone. Great conferences, well, there's hardly any here anymore. Great sporting events, maybe. I really think that Super Bowl this year is also going to be very good for us in terms of the storytelling of why Seattle and why we're an important city. But yeah, I think Qatar is an urban experiment extraordinarily successful, because this tiny place with a large corpus of sovereign wealth, but no visitors really and no residents to speak of, used it as a reason to bring people back for inbound tourism.
If we have the visibility globally and we have a wonderful quality of life, you just said moments ago, this is among your favorite cities in the world for lifestyle reasons. And relative attainability, at least for now, compared to some other world-class cities on the rise. What would happen in the Pacific Northwest if President Trump is successful with this gold card visa of sorts? Explain what's behind that and the likelihood that that kind of a visa program could be a new wave of EB5 investment into our region.
Well, it's very interesting. I think planned immigration is much better than sporadic. So anytime you give people with means an opportunity to bring their family for a better life, and they take it, that's a good thing. So I'm a perma bull on this kind of EB5 and now the gold card program, because it's self-selecting, right? If you have the means and you have a clean background,
Right.
then you deserve to be here. And if you think about it, some of the greatest private clubs of our time, the Wentworth in England, Yellowstone Club in Bozeman and Big Sky, were built by EB $5. I mean, the Montage Resort. And I just think it's been a real estate accoutrement up till now, but now it's going to become like literally a builder of anchor investors. All our ventures, right, OpenAI, et cetera, are looking for international investors right now. Yesterday, I read somewhere that DST and all these other funds have invested in, a large offering, right, with Waymo. Why is every third investor from another country? Because it's the people in the other countries that are seeing this as their land of opportunity. We're not only Bellevue, we're a proxy for the United States of America. And I'm very proud to be an American. So I really think immigration is what tells that story. If you think about it, we're both Canadians as well.
Right.
The great immigration from Hong Kong and China is what defined Vancouver.
Absolutely.
Till the other day.
Right.
Well, I really think we have a shot at the brass ring with something like that. So I would love to say that 3 or 4 of my friends from other countries are now going to be, recipients of that, and we're going to welcome them into our community.
Well, let's tread lightly on the politics, but have a real conversation about Canada's policy and recognizing the global competitiveness that it had with that great wealth transfer, especially from Asia, because we saw many decades of in-migration, and there was its form of a golden visa program for making a relatively modest investment to get residency.
Right.
But oftentimes mom and child or mom and children were here, but dad was flying back and forth and not declaring global income.
That was the archetype.
And the problem also was, yet at the same time, real estate values were going up so high and so quickly. But as you know, as a Canadian resident, your principal property that you live in for many years and then sell, that capital gain is tax-free.
Completely.
So is it possible that with misreading the demand, the Canadian government might have missed both on the income taxes of that affluence and also on the capital gains taxes of the real estate rise?
I think they absolutely blew it. That's why there's so many phantom residences in Vancouver and Falls Creek and Yaletown. I mean, these were all investors that bought units like popcorn off plan, and the whole thing became a racket. And I feel like we avoided that here. People that bought into South Lake Union and other developments bought in because their job brought them here, not because they were speculating on that unit going up in value. So as Americans, I feel like our fundamentals are much, much better. There's not that vibrant job market in Vancouver, so they overreached. They should have taxed them differently. You should tax people based on really where their real estate nexus is, not where they spend a few days here and there. And that's what I love about kind of like our states. Like Wyoming doesn't really have a 183-day count for residents, but as long as you live there, and your driver's license is there, and your mail goes there, and you have a property there, and you spend sufficient time there, you're a resident.
But know your value as a politician, whether it's on the federal level or on a state level or municipal level, and understanding that by working with the wealth that wants to be there and having a fair share of taxation without scaring it away altogether. Because it's not just the loss of a billionaire here or a billionaire there. It's the waterfall effect of that spending. And there's fewer car sales and fewer restaurants and the ongoing issue. So I think we have an opportunity to reset that. We're going to be on a global stage with all the sporting events. We have already seen hospitality and tourism largely return to pre-pandemic levels. The housing market feels stable and likely to grow. Obviously, we've got a limited commodity of real estate here because of the Growth Management Act and a lot of the waterfront and such. We've seen some upzoning, in the light rail arenas, which is also akin to what happened with the rapid transit systems up in Vancouver, BC. Right, everywhere SkyTrain landed was an upzone, and that's more of a European model as well. And also in Asia, you see that throughout.
Very much so.
So we're getting little drips of some of those tea leaves here, and it has me excited, which I feel like I'm in the right place, in the right brand, at the right time, talking to luminaries like yourself about where we might go. But our government needs to learn from the lessons of the last 10 years in terms of their policies, and there is a cause and effect and a reaction. So hopefully we can get that figured out.
Well, and look at Dubai, and look at Vancouver, and look at Miami, and look at other cities that essentially attracted people. And then the common thread amongst all of them was tax friendliness. It's an unbelievably sticky point. And I would say what Bellevue has going for it the most is new employers. Hardly anyone talks about that, but like today I heard about another Silicon Valley darling that's moving here, and a Chinese darling that's moving here.
Hundreds of thousands of square feet of office space because it was at the ready. I say this about downtown Seattle all the time. And there's 15, 16 million square feet of unleased office space and probably a larger hangover of sublet and potential sublet space.
100%.
But guess what? It's available inventory. It might not be at the price that the landlord wants or the bank wanted, but it's there ready to welcome the next innovator, the next venture capital fund that doesn't have to be an Amazon in a garage. It could be prime real estate downtown, full floor,
from day one,
Class A, day one in a livable city. So isn't that overhang actually a good runway for business?
It's phenomenal.
Okay.
And now you've taken away my biggest personal risk, which is if I lose my big employer job, I've immediately got a smaller company in Bellevue that I can go to work for. That wasn't there 10 years ago, 15 years ago. It was Microsoft, it was Amazon, and a couple of other people.
Right.
So I really think that we are at the right place in terms of corporate employment. We're the right place with the startup culture. We're definitely at the right place with quality of life, because the weather here, if you look at all the weather patterns we've had in the last month, this area just seems to be sunny and mild.
And we can still get property insurance, can't we?
100%, exactly. And you know, and frankly, it is very much a conversation, and nothing has been decided at the state level with many things. So I really think it is up to us as corporate citizens and as good citizens to really speak up when we can and be inviting of people. Yeah.
Kartik, I want to ask you another question because we're coming up to midterm elections. There could be a series of executive orders and last moment reactions to policies in shift. What do you think this year is going to represent politically and for our economy? You think there's a risk of a recession? Where do you think the markets are going to read?
Well, you just spelled out my favorite word, risk, because managing risk on behalf of someone else and mitigating it for them is what we do as good shepherds. And I really think you as a rental advisor are going to be de-risking a client from like selling their house and then being homeless or locking in a gain and having to pay tax, and instead buying time because it takes away that risk of ownership, essentially, collecting a little bit of rent. I think the risk this year isn't grave. It isn't like a tail risk, like Liberation Day or COVID. I think the risk is very much that nothing happens. We actually, as kind of residents, want something to happen, right? We want check and balance. We want there to be a more progressive government. So I really think things are getting better. I mean, I'm a perma bull, and I think this year will end up from where we are today. I think there's going to be a lot less volatility in December than there is today. And I really think this kind of midterms that you're talking about, is going to be self-selecting. The better player will win, the better party will win. But what will happen is our state, which is incredibly progressive, it almost shields us from like political drama, and we're going to remain that way. I mean, I think we're this kind of bastion of capitalistic, entrepreneurial kind of bliss. And I really don't see that changing. I mean, I'll go to Redmond Town Center or go to Bellevue downtown. I go to any of these urban pockets, and I just feel such peace of mind, People talk about walk score. I call it the drive score. I want to be within minutes from a Whole Foods, from a Trader Joe's, from a Costco, from a Starbucks, or whatever it is that I frequent. And we have that in droves here. We don't have to drive for 2 hours in traffic anywhere. And I really think that if we protect our employment, protect our startups, and protect our tax structure, we're going to be in great shape. Yeah. So I really feel like when I receive wisdom, I say we're drowning in information and starving for wisdom. So when I receive that, I got to do something with it. So I love dripping on clients. And I also think it's very important for people to realize for high end, you got to think high end. Like you're a high end brand. You're an accessible brand, but you're clearly affluent. And I think our customers are very similar. They want something more prestigious. right? They want the Swiss watch.
It's
They don't want the Timex.
a shared psychographic too, because yourself, you're a client of Sotheby's, the auction house, and your relationship with the brand goes
and I'm
back.
mass affluent, but I recognize the value of that.
What was your early experience with Sotheby's as a brand, as a consumer, and even an auction bidder?
It was minimalist. Like, their showings had no drama. The signs had no, like, monsters on it, and it was very austere. The staging, landscaping, messaging, photography, production values were very, very high end. It felt like a glossy. It didn't feel like I was being hustled like the rags you get when you walk into restaurants, right? So I love the idea of having my customer who's buying my house, or me, the customer, buying someone's house, not being oversold. Properties will sell themselves. You just have to message them correctly. So that's one. And the second one is the Sotheby's Realtor in every instance was able to price better. I think it is about data. I mean, we live in a data world, right?
Absolutely.
Like, God said, trust me, but everyone else bring data, right? So I think there's magic to having pattern recognition. So franchise value, pattern recognition of thousands of transactions, and global reach. I'm a global citizen. You're a global citizen.
Right.
I sold my house in Lake Como with Sotheby's.
Fabulous.
It was by chance. I was looking for EV, Sotheby's, the usual suspects, and Sotheby's just rose to the top. So in my mind, the world is a meritocracy, and if Sotheby's is my better bet, then I'm going to go to Sotheby's. And so I like your scale. Yeah.
I appreciate that. It's the 50th anniversary of Sotheby's International Realty in 2026.
Yeah.
We're celebrating in San Francisco, the global networking event in early October. It's going to be an extraordinary showcase during a really unprecedented year in our industry.
Yeah.
It was only 4.5 months since the first conversation to the closing of this mega merger between Compass Real Estate and Anywhere Brands, which includes the collection of Sotheby's International Realty and many other affiliate companies. And it was a remarkable sea change in our industry, because that has now combined 340,000 real estate professionals in 120 countries, and massive influence and power. And in addition to us receiving the technology that has been over $1 billion invested over the last 15 plus years, it is a network that is unmatched. And there's a reason why the Sotheby's International Realty brand was the marquee that was being searched for, because of the trends we spoke about.
Correct.
International investment and all kinds
franchise value.
Franchise value.
Tech. It's a tech play now.
Absolutely.
It didn't used to be a tech play.
Right? What are your thoughts about that kind of mega merger taking place in industry? I mean, it's happened in almost every other industry where number one and number two become a distant number one from the second, third.
Fragmentation goes away as market leaders emerge. What I like about this is that it's predicated on customer data and global reach, and less about brands coming together. I'm glad that the noise in the branding has gone away. Anywhere was never a public-facing brand. It owned all these brands. And I think the capital markets speak, and Compass had the capital markets on its side. So it used its scale for greater good. I think Rocket Companies used its scale for greater good. So I like real estate consolidation a lot, because the last thing I want is confusion as a buyer or seller. So now I know that when I'm working with this group, I'm working with Sotheby's, right? And it almost gives me Sotheby's for free in a way. It gives me the power of Sotheby's, right? So I'm relieved, because now I know you can cross-market my house to all these other venues, right? So scale is never bad. It always helps the consumer. Like, we shop at Best Buy, not a tiny little appliance store, because we trust in the scale. So I really think, you've become an arbiter. It's like RH, right? Getting bigger with home furnishings growing. And now it's like top of mind. I also think that there's a magic to Sotheby's staying in its own lane and not colluding with other kind of more mass market real estate firms. So I really think it also helps you make the higher end case. High end it's a mindset. It's not a price thing, I want price discovery. If I have a $4 million house, I have more to lose. if it's mispriced.
Right.
So I really think the opportunity cost of me making a mistake on a wrong agent goes away if I can trust you. And I really think it's trust. It's all about trust.
Yeah, absolutely. No, I agree with the parallels completely. And I do think that the way we practice real estate as an advisor is very similar to your wealth management, your clientele. It's a whole ecosystem that we care about, and it lasts a lifetime and well beyond any particular transaction.
Right.
And I have a little bit of a different view of it because I'm not the broker.
Right.
I have fabulous brokers that I work for. They're my partners.
Yeah.
My job is to apply my experience as a developer and to build a different type of vessel to attract the greatest talent. And I'm not competing with them.
It's very culture-centric.
Collaborating with them. Absolutely.
Yeah.
And I've watched incredible transactions be birthed right in this room, in any one of our offices, or across state lines or even internationally.
Yeah.
And this is a legacy brand. It is also a lifestyle brand, Kartik. I think we are introducing to our clientele new lifestyle potential, new ways that they could live. Absolutely, lots of brand alignments as well.
And this portability of our roles is very, very important. The reason why Amazon executives moved during COVID was their job was portable, and then it wasn't. But I think we as entrepreneurs are always searching for a better place, a better zip code, a better school district. And we outgrow our service providers very quickly. I certainly do. So I feel like you're giving me something with your rental agency and with your reach that I won't be able to outgrow regardless of where I choose to take my family. And I value that. Yeah.
Something else we've talked about, Kartik, is the idea that you've got individual investors that are looking to make placement bets in neighborhoods they understand. And now with House Bill 1110,
directly,
just the family,
not through middlemen.
Yeah, and we can purchase real estate, match make them with a development friend client that can help elevate and build through. And now they've got a small rental community that they can own in their family legacy.
They live with their friends, friends brought with friends, and friends invested in friends' companies and syndicates, right? Now, that's very glorified and it's very expensive to get into, but like these are all walled gardens everywhere, communities that move and band together. Vancouver had that happen
for sure
with the Persian community, with so many, with the Ismaili community. And I think there's magic to that when you can take your friends along for the ride, and you're going to see more and more of that in this kind of glorified co-living, if you will. You know? Yeah.
And we're doing that with even mid-rise condominium estate properties that are not part of House Bill 1110 regionally, but really on 100% locations that never were available for sale to a third party because the family trust or the family office was concerned about it being sold short of its future potential. If I'm going to send to a buyer, then they see value in it that I might have left behind. And so why not develop that property together? And in the current
legislative... It's almost a partnership, a JV of sorts. Yeah.
We can syndicate equity for our clients to become a future partner of that development, and then they take their exchange in the form of the real estate itself.
Sure.
And so these are going to be very high-end sort of luxury developments in very key locations that wouldn't otherwise be developed because the risk profile was too great. But if you brought in 10 like-minded individuals that are part of that LLC, now you're just playing an administrative role as a developer as opposed to taking on the risk.
You're the syndicator, you're the lead. And in a way you bring trust to the transaction. In case somebody 100%. Wants out and someone wants in. And I think managing cap tables in real estate transactions is very important. PE firms played that role for the longest time. And loose investor clubs sort of went away in 2007 and 8. And I feel like this is the big comeback for commercial real estate, for multifamily real estate. And that's RV parks, like storage units. I mean, light industrial, right? In IOS, right? Industrial outdoor storage. I mean, you're hearing all these acronyms and jargon that just didn't exist because me as an individual may want to rent, but I want to park my cash in real estate still. And I would rather syndicate with you because I trust you, Dean, than just throw my money randomly into the stock market.
Well, there's going to be so many opportunities for us to explore together for your clientele and all these emerging markets. I appreciate your time on the podcast. We look forward to your contributions with the 2026 market report for Realogics, Sotheby's International Realty.
You bet.
And we will continue the conversation all year long. This has been Market Perspectives. We'll see you next time. Be sure to follow us on social media.